Good afternoon, good morning, dear participants, dear colleagues, dear friends, and thank you very much for joining us for the second webinar on sustainability reporting. I would like also to take this opportunity and to welcome our participants in Skopje who are attending a face-to-face training on IFRS 17 insurance contracts with Daryl Scott. So thank you very much for joining us for this webinar as well. My name is Svetlana Platon. I'm Senior Financial Management Specialist at the WorldBank Center for Financial and Sustainability Reporting Reform. Before we start, there are a few aspects that need your kind attention. And Katerina, I kindly ask you to move to the next slide. So first of all, please note that for this event, we have simultaneous interpretation into Russian, Albanian, and Bosnian, Croatian, Serbian. To hear your preferred language, please select the globe icon and you will see your language. If you cannot see the globe icon, please press three dots icon and you'll see the globe and you will be able to select your preferred language. In order to hear the interpreted language only, please click mute original audio. Your microphones and cameras are muted and switched off during the entire event. Still, you will have the opportunity to post your questions using Q&A box. Please indeed use Q&A box instead of the chat. Still, you can use the chat for any technical questions or issues during the event, if any. During the presentation, we'll have several breaks for questions and answers, and the most relevant questions will be selected from the Q&A box. If your question wasn't selected and answered, please know that it would be addressed later during the presentation or in subsequent sessions next week. The event is being recording in all languages, as well as the presentations will be available on CFRR website in September, and we will share the link with all participants. Also, I would like to inform you that the webinars are organized by the WorldBank Center for Financial and Sustainability Reporting Reform under our regional program enhancing accounting, auditing, and sustainability reporting. The program is co-funded by the Austrian Federal Ministry of Finance, the Swiss State Secretariat for Economic Affairs, and the Austrian Development Agency. And we are very thankful to our donors for their support to this important reform agenda. Sustainability reporting is just a tool. It cannot directly solve all climate, social, or governance challenges. However, our profession of accountants and auditors still can contribute by ensuring that relevant and material information is appropriately prepared and disclosed to decision makers, to potential users. And in this way, we can still play an important role and support a better world on a livable planet. Today's webinar is organized in cooperation with IFRS Foundation and will address industry-specific disclosures. It will be moderated by my colleague, Andrei Busuyok, a Senior Financial Management Specialist. Many of you know Andrei from his active role in promoting corporate reporting agenda, including aspects related to public oversight and quality assurance aspects in our region. He recently assumed a new role as a financial management coordinator in Africa West for Ghana, Liberia, and Sierra Leone. However, we hope we'll continue our collaboration and benefit from Andrei's experience and expertise. Over to you, Andrei.
Thank you, Svetlana. Hello, everybody. I hope you can hear me well, and I'm pleased to moderate this session today. And thank you, Svetlana and the team, for inviting me. So today, as Svetlana mentioned, we will be talking about industry-specific disclosures, and we are very privileged to have Jeffrey Hales with us, a member of International Sustainability Board. Jeffrey was appointed as a member of ISSB in 2022. He served as a chair of the Value Reporting Foundation at the Foundation's SASB Standards Board from 2018 to 2022. And he was overseeing the agenda setting and due process associated with the standards development and maintenance. Jeffrey is also a teacher at the University of Texas, where he is a professor of accounting, and he widely publishes research that focuses on reporting standards, regulation, and behavioral finance. In the full agenda of the event, you can read full additional information about Jeffrey. And without further ado, I'll pass over to Jeffrey for his main presentation of today. And we will break in the meantime for questions when Jeffrey will finish some parts of his presentation. We will have breaks for questions. Please type in your questions in Q&A box, and we will select those to be answered live. Thank you very much. Jeffrey, over to you.
Thanks, Andre. While I go ahead and pull up my slides here, let me just also say welcome, everybody. I'm really glad that you can join us today, and I hope this session is going to be informative for you. Can you see my slides okay? Wonderful. Also special thanks to Svetlana, Andre, Arun. Thank you all for helping to put this event together and the whole series. Actually, I hope this will be very useful to everyone who's joining. And I think the goal today isn't to make you an expert in the SASB standards, but really to help you understand what is contained in the SASB standards, how you might be able to access that information, and then what it could be used for. So really trying to create tools that you could use to help you in the work that you do, but recognizing that there's a lot of content, and so hopefully it doesn't seem too overwhelming, but actually that you can kind of see the reason behind all of it and how it fits together with the ISSB standards. So that'll be the goal. As Andre mentioned, I'm a professor by training, and I've been teaching financial accounting for many years. And about 10 years ago, got involved with sustainability accounting through the development of the SASB standards. And so I'll talk about that work, but that ultimately led to the opportunity to be chair of the SASB Standards Board up until the time that the SASB Standards Board was consolidated into the IFRS Foundation as part of the effort to create the ISSB. And so feel very fortunate to continue to have an opportunity to play a role as a member of the ISSB and to continue to really steward the SASB standards as they continue to be used in the marketplace. So lots of goals for today, but hopefully this will be useful. And as both Svetlana and Andre mentioned, I highly encourage questions throughout. I think it's the more interactive this can be, in many ways, the better. And as a professor, I welcome questions. So I'm not used to talking just without breaks, actually. And unfortunately, I'm just recovering from a cold today, and I'm not in my teaching shape. So this is a 2-hour session. So really, the more interactive it is, I think the better for everybody. Don't feel like you have to wait to ask questions. So with that, maybe to start off, the focus today, of course, is the SASB standards. But But there's a special context for the SASB standards, which is to understand not how they exist as a standalone set of guidance, but recognizing that actually the SASB standards play an important role inside of the ISSB standards. Now, the ISSB has only been around for a few years and has only issued at this point 2 standards, which I believe you've already gotten some exposure to, but just very quickly, those standards are General Requirements Standard IFRS S1, which lays out the foundation for what is expected from companies when they disclose sustainability-related information that is intended to be used by investors for investment decision-making. And then IFRS S2, which is climate-specific standards. So when a company faces climate-related risks and opportunities, what the specific information that would be expected for them to disclose. So those 2 standards are the 2 standards that the ISSB has issued so far, but because they're fairly high level and industry agnostic, they also point to industry-specific guidance as well. In fact, in both S1 and in S2, there are requirements for companies to disclose industry-specific information. This would be information about risks and opportunities that tend to be prevalent in a given industry because of the type of information or the type of activities that different industries engage in. And so the current requirements in S1 would be to pointing to, well, when you talk about risks and opportunities that a company might face, which risks and opportunities should a company be reporting on when it comes to the helping to identify that information? The S1 guidance points to the SASB standards and says, a company shall apply the ISSB standards and also consider the SASB standards that are relevant to their industry. And then there is some additional guidance in S1 that would point to other sources of industry practice, or if there were other standards that were developed for the purpose of investor decision making. Again, that could be something that a company might find useful to refer to. But what's specifically required for companies to consider is not only the ISSB specific standards like climate, S2, but also the SASB standards. And then also related to that, that would be identifying risks and opportunities, but what specific information should a company disclose? How would they prepare that information? This would also be something that the standards require a company to look to the SASB standards for additional guidance to be able to determine what to report. So let's spend a little bit of time thinking about what are the SASB standards and why do they play such an important role in the ISSB's framework. So the idea for the SASB standards began now about 15 years ago, and it was through a white paper that was co-authored by 3 individuals: Steve Leidenberg, Gene Rogers, David Wood. You can see their names here. And the idea in this white paper was that although at this point in 2010, you could say that sustainability reporting was very common on a global basis, especially among large companies. The GRI standards, for example, had been out for, at this point, I guess, 10 years, and there were thousands of companies producing sustainability reports, many of them using the GRI standards or other frameworks, disclosing to CDP. But one of the things that these authors captured was this idea that the information being produced in those sustainability reports wasn't primarily designed to inform investor decision making. And the idea in this white paper was that what would be most useful would be to take the information that would be relevant in particular industries and pull out the key performance indicators that would help investors to understand how one company is positioned in terms of performance on those dimensions compared to another company, a peer company. So really recognizing that this should be done on an industry basis because the issues are different from one industry to another. Recognizing that that's also the way that investment decision-making often happens is relative to industry peers. And recognizing that it would be helpful to have specific, as much as possible, quantitative as well, performance measures that would speak to those underlying issues. And they mentioned in this white paper that it would be ideal, actually, if this wasn't developed by a think tank or a consultancy, but actually if it were, or an industry group even, but if it were to be developed by an independent standard setter. And they floated the idea that it could be called the Sustainability Accounting Standards Board at the back of the paper. But it was really just an idea, concept. They put the paper out, it got a lot of positive feedback, and people started asking, where are these KPIs? Where is this SASB? And they said it didn't exist, but basically, Jean Rogers took it upon herself to start to found a nonprofit that would take on the mission of trying to develop this type of guidance. And so that's where the SASB started. I think within about a year and a half, the work had already begun, and in 2012 is when I first had the opportunity to get involved in the development of SASB standards. So because the focus of the SASB standards was to think about what would be useful to investor decision-making, the idea then was to identify the environmental issues, the social issues, and the governance related to those issues that would be reasonably likely to affect a company's financial condition or its operating performance. And so that's tying in very closely to the notions of what we would think of as like financial materiality. And in order to develop that guidance, the goal was to look at two things, really. The first was, what are investors asking for information about? What information do they say that they use or do they say that they need? But then also, there was a second part to this, which was to think about what is the evidence of financial impact. So thinking about if there's a risk or an opportunity, how will performance on that risk or opportunity translate into financial effects at the end of the day? And that's important because of two reasons. One is that it's important to make sure that investors aren't asking for information simply because they recognize that that it's a preference for the way that they want to invest. Investor preferences are important, but they can be widely divergent. And so what standard setters tend to focus on are the common information needs, things that on average could be reasonably expected to affect most investors. And being able to identify that core set of information was really important, as well as understanding how that would translate into financial impacts. Is it going to affect the revenues of a company, the cost structure, access to capital, any of those issues? But it's important to understand which of those, so that we could also then go back to companies and say, well, this is what information we're hearing investors want, and this is why they want that information. And that's a really important part of helping to bring companies along to help them understand why it would be helpful if they were to disclose this information to capital market participants. So when the SASB standards were developed, there was a set of guiding principles. These 6 bullets here were really helpful for thinking about how we would go about the work that we were engaged in at that time. And I really think of them in 2 parts. You can think of the first 3 as being what I think of as the goal of the standard setting efforts of SASB. The goal being to develop guidance that would produce financially material information, but not just that it would be important for investors to know about, but also that the information could be decision useful. And And I think that's a really important distinction and one of the really important roles a standard setter can play. And an example of that would be if you think about risk factor disclosures. Companies, when they're producing an annual report, will talk about the risks they face, but often those are discussed at such a high level without really talking about their performance on those dimensions that it doesn't really translate into something that's actionable by investors. And so not only identifying the financially material issues, but also turning that into decision useful information is super important. But then recognizing that no information comes for free. So also producing guidance that would be cost effective for companies to apply. So those first 3 bullet points were really the goal of the standard setting efforts of SASB. And the second 3 were the path to get to the goal, as I think about it. And so the focus there was first on industry. So thinking about developing guidance that would be specific to companies in a given industry. And that would help to identify what's financially material by focusing on business activities in that industry. It would also support cost effectiveness because you're not asking every company to disclose every bit of information. But then not just coming up with our best ideas of what we thought would be useful for a given industry, but first trying to look to really where there's evidence of the information, the importance of the information. So thinking about looking at what are companies disclosing currently, what do we see in academic research, what does it look like, when we look at where there are like legal repercussions, what are governments requesting or monitoring information about. And so really looking for evidence of what the relevant issues are. And then at the end of the day, not just, again, deciding what we think is best, but putting it out there for the market to give us feedback on. So going through a public consultation process that would, both formal and informal, that would give us some assurance that this is, in fact, information that investors would find useful, and that this is, in fact, information that companies say that they could produce in a cost-effective way. So thinking about the financial impact, the importance of evidence of financial impact, this is just an example of how if you look at different SASB disclosure topics, they should be related to different types of financial drivers that ultimately would translate into financial reporting outcomes, right? So if there's a sustainability topic that isn't really related to a financial driver, that's not likely to have a material impact down the road on revenues or cost structure or the asset values captured on a balance sheet or the liabilities recorded or not that a company has. If this doesn't affect any of those, if this issue wouldn't affect financial outcomes, then if we can't see the link there, then it's probably not the type of information that would be related to investor decision making. It's not really going to inform an investor who opens up the financial statements. It's not going to help them to better understand those financial statements. And so it's not to say that there might not be a role for managing those issues and disclosing information about those types of other sustainability topics, but it wouldn't be the focus of what the SASB standards was trying to capture. Nor would it be part of what the ISSB is primarily focused on. So in order to do this, SASB took really a 2-dimensional approach. This is the first dimension here, thinking about what are the issues, but that's really just the first dimension. So we'll come to the second in just a second. But different standard setting organizations have taken different approaches to thinking about sustainability. Some of them start off in a fairly narrow way. The TCFD, very focused on climate, just climate-related issues. If you think about CDP, started off also focused on climate, but then over time ended up moving into a number of additional areas. And so went from being the Carbon Disclosure Project to CDP, to not be too distracting. And the Climate Disclosure Standards Board also started off initially with guidance related to climate specifically, but then over time developed water nature guidance as well. So SASB started off with a very broad view of what sustainability issues could be relevant. So thinking about, trying to take the entire universe of sustainability issues. Here they're broken down into 5 different buckets. I will say the 5 buckets are somewhat helpful for grouping together related issues, but the 5 buckets are not super important. Actually, the issues that sit underneath each of these 5 buckets are what we call general issue categories. And so I'll just write that acronym down, GIC, a general issue category. That relates to the bullets that sit underneath each of these different dimensions. That'll come up because it's part of the way that the SASB standards are structured, organized, and so can be a helpful way for you to understand how to see some of the cross-cutting issues that show up in different industries. So, but you can see here that SASB was not focused only on climate-related issues or environmental issues more broadly, but thinking about different aspects of air quality, including greenhouse gas emissions, but not only greenhouse gas emissions, energy management, waste management, other types of ecological impacts. On the social side, when you think about how a company interacts with people, there were 2 parts to this, the social capital and the human capital. You can think of human capital as being more inward facing. So SASB would be thinking about human capital as being when a company has more of like a contractual relationship with a human, so they're employing them to do some type of work, or when you think about other individuals, so it might be a consumer relationship, so customer privacy, it might be access and affordability to products and services, product quality and safety, customer welfare. These are related but different issues. But also the people that end up being affected by a company's operations, even if they're not employed by the company, and even if they're not buying that company's products. They might be living near where a company operates or affected by the impacts of a company's operations. So thinking about human rights and community relations is another important issue. And then the last 2 buckets are leadership and governance, as well as business model and innovation. So capturing some of the governance aspects of sustainability, but then also thinking about some of the business model and innovation. You can think of this as some of the categories that are capturing supply chain issues or the way that products are designed. And that often has implications that aren't just environmental, aren't just related to individuals. And so they're not easily put into just a specific category. I will also note that, again, these categories, I wouldn't focus too much on the 5 buckets, in part because there are no environmental issues that we care about that don't ultimately end up impacting people. So in some sense, they're all interrelated to a degree. So that's the first dimension. There were 26 different issues that SASB would consider. But then when you think about, well, which of those issues would be relevant for a given company, then the approach that SASB took was to develop an industry structure to say, well, it's going to depend on the type of industry. And so in addition to the 26 different issues that at a high level SASB would think about, they also thought about 11 different sectors in which companies might operate. But in the same way that the 5 groups is not so as important as the 26 categories that sit underneath that, the 11 sectors aren't as important as the 77 industries that sit underneath those sector classifications. So this is a way to then bring the intersection between 26 different issues and 77 different industries, recognizing that a transportation company is going to be different than a company that's in the financial sector or a food and beverage company, for example. So This is hard to see, which is okay. You're not meant to be able to read it, but this is really meant to show what happens when you take 26 different general issue categories and you cross them with ultimately 77 industries. You get a 2000 by 2002, I think, if I remember the math, matrix. So there are a lot of squares in here. But the important thing to point out here is just that the types of issues that might pop up as being more likely to be relevant so this is right here, this is the environmental issues in the extractive sector. So you can imagine that there are different types of extractives companies, whether it's a coal company or an oil and gas company, might be facing related but somewhat distinct issues. But that could be quite different than, say, the financial sector, where environmental issues won't play as prominently as thinking about other types of issues. The direct implications on the environment for a financials company is relatively pretty different than a mining company's environmental footprint. So we'll come back to this in a little bit when we go through the SASB Navigator. But it's important to recognize that this actually is just really the work that the SASB Standards Board did to identify this materiality map is really just a starting point for the standard setting activity. But the hard work, in a sense, then goes beyond that, because it's not just identifying what's reasonably likely to be financially material, but also thinking about, well, but what specifically would be decision useful if companies were to produce that information. And so that's where the underlying standards would identify that more specifically. So there are 77 standards that sit inside of the 11 sectors. And so you can see that this is really a better way to think about the value of the SASB standards is for any given industry, identifying what's a specific topic. So I think this is taken from an oil and gas standard. Greenhouse gas emissions might be one of many topics for that given industry. And then in addition to saying, well, not just saying that greenhouse gas emissions are important, but what specifically would be useful for investors to know. So here it's identifying the gross global scope 1 emissions, the percentage of the company's emissions that relate to methane, and what percent of those emissions are actually covered by emissions limiting regulations. So identifying a more specific metric or set of metrics that could help an investor to understand how one oil and gas company could be performing relative to its peers. And then again, giving companies pretty detailed guidance that would help them to produce information that could be reproduced by a third party. Ideally, that could be built into a system, like a software system that could help the company to gather and produce the information, tag it in a particular way so that it can be extracted more easily, and then ultimately verified if needed by a third-party auditor. But also building controls, even if that weren't the case, the company could build controls into that so that they're not relying only on, for example, spreadsheets and sticky notes to gather the information, and then ultimately to make the information more useful in application, providing a set of activity metrics that would help to scale a company's activities, because obviously a larger company is more likely to have a larger scope 1 footprint. So understanding the intensity of those emissions could be important for investors. And so having a set of activity metrics can provide a standardized set of denominators that could help a performance metric like scope 1 emissions be applied and used in a way that could help improve comparability from one company to another. Okay, so that's at a very high level, the SASB standards, and just to take like a specific example. So if we looked at the financials sector, here we have 7 different industries inside of the financial sector: asset management, commercial banks, consumer finance, insurance, investment banking, mortgage finance, and then also securities and commodity exchanges. So if we were to look at a commercial bank here, you would see the SASB standard for commercial banks, and each of these standards would have not only the sector that it is in and the industry name, but then also it's tagged with a version, so you can see when it was last updated, and make sure that you have the most current version. And then if you were to open these are basically PDF files. That's one way you can access the information. But if you open up the commercial banking standard, it's going to have an industry description, which is going to help the companies that are, for example, applying the standards to make sure that the industry description fits the activities that the company has. And then in addition to that, there would be a table that would describe the various topics that have been identified for disclosure and the set of metrics that relates to that those given topics. And then as we mentioned, there's also again, this is just at a high level, but there's a lot of guidance to help a company to actually know, like in this example with data security, asking for information about the number of data breaches, the percentage that include personal data, and how many account holders have been affected. In order to have that information be more meaningful, it's going to be important to understand, what do we mean by a data breach? What do we mean by personal data? What do we mean by an account holder? So helping companies to apply the information in a way that's consistent, and then ultimately producing comparable information. So that's the output of what the SASB Standards Board did, produced 77 different industries. This provides a little bit of an overview in terms of like how the work was done. So again, this idea that you take the different sustainability issues, you do industry-based research to see which ones are most likely to be financially material, look for that evidence of financial impact so you can make sure that we're capturing the right issues and producing accounting metrics that would be most relevant to use by investors, taking in market input through advisory groups, through talking to companies, talking to investors, vetting that evidence through the standard setting process, and then first putting any proposed standards or standards revisions out for public comment, and going back through the re-deliberation process there. And then after re-deliberating, putting the final standards or revisions to the standards to the board for approval. And so that's what's led to the current state of the 77 industry standards that SASB has. And then, just to give you a sense of the focus of these standards, on average across the 77 industries, there are about 6 or 7 topics per standard, and about 13 metrics per standard as well. So not asking for a ton of different things, but really trying to hit at some of the core issues there. So that's an overview of the SASB standards. Maybe we can pause here and see if there are questions that have come up that haven't been answered yet.
Thank you very much, Jeffrey. So I think this was a good first part of presentation, and we appreciate very much the information provided. There were a couple of questions in Q&A box, but I think we answered them all because some of them were about the scope of the standards, etc., etc.
Gotcha.
So maybe what I will do now, I will ask a couple of questions which we have from our team basically, and then we'll see if QA box will be supplemented by some additional questions. So
sure.
The first question is, what is the status of SASB standards when we speak about their application in a particular jurisdiction? For example, for use of IFRS accounting standards and IFRS SDS, any jurisdiction should enter into an agreement with IFRS Foundation. Is the same logic applicable with respect of SASB standards, including the disclosure of full application, or could the standards be used rather as a guidance by a company? So this is the first question.
Yeah, it's a good question. So first of all, the SASB standards are available to be used by any company anywhere on a voluntary basis. So that can be done. But the second part to this then is thinking about what the specific role of the SASB standards would be in a given jurisdiction with respect to the ISSB standards. Now, this will be partly determined by the way in which the jurisdiction implements the ISSB requirements. And so for a jurisdiction that has fully adopted the ISSB standards, then that jurisdiction would not be making any substantive amendments to the standards. And so that would mean that companies in that jurisdiction would have to consider the SASB standards to look to what's relevant. And we'll go through some examples of what that would look like. They would have to consider that, but you can think of it more as guidance in that, like a required guidance to consider, but not necessarily that a company would have to apply the SASB standards if they didn't think that the information was appropriate or relevant to their circumstances. Then, in other jurisdictions, it's possible that they might be focused only on climate, or they might be limiting the extent to which they're asking for industry information. So, I think we have seen that be considered by at least a few jurisdictions. And so, if a jurisdiction took a narrower approach, then they could, in a sense, carve this out entirely. But what we've seen, I think, if you can look at the jurisdictional profiles that the foundation has started to publish for those jurisdictions that have finalized their consultations, you can look at those jurisdictional profiles and see what the basic status is. Have they made any significant adjustments to the way that the ISSB standards are published and how they would be applied? And in most of the cases, it seems like they're keeping pretty true to the requirements in S1 and S2 by and large. But over time, we'll see how that develops.
Thank you, Jeffrey. And there is a question in Q&A box. I would consider it as a follow-up of the previous one. It's basically to ask that in the EU, the Omnibus Directive decided to end sector-specific ESRS. So do you think that SASB standards may get a greater traction in Europe because of that?
So yeah, that's a good question. I know that my understanding is that they had paused the development of sector-specific standards. I think one of the challenges is that depending on the way that standards are developed, it can feel as if the sector standards are more disclosure and therefore more onerous, more burdensome. So it depends on the way in which ultimately the guidance is being applied. But the way that we think about the industry approach of SASB is actually that it's a proportionate way. So take our S1, which would say a company needs to disclose material information about all of the sustainability-related risks and opportunities that could reasonably be affect its prospects. So that's a very company-specific requirement, and we'll never be able to provide very detailed guidance on all of the things that any one company should disclose because every company is somewhat unique. We can identify some things that might apply broadly to most companies, but in my view, one of the most important aspects of trying to provide useful guidance to companies and how they could meet that general requirements standard is to say, so in your industry, what are those issues? You don't need to we don't need different companies in the industry to decide what the different industry issues are. Let's go ahead and do the hard work of standard setting to make it easier for companies to apply those standards. So I think that over time, you're going to see a demand for industry-specific guidance. And you can actually see this in most of the standards that are out there. It's the hard work to do, but GRI started with thematic standards and then recognized the importance of doing sector work. So they have, for the last few years, launched a sector program to help develop guidance that would basically, help companies to apply the GRI topic standards in a way that's more consistent, produces more comparable information. The TCFD, for example, and the TNFD, they provided or do provide the high-level guidance across companies, but then they recognize the importance of industry as well. Industry is oftentimes the thing that is intended to be done later, but it's the hard thing to get to. SASB made, I think, a very smart choice early on in just starting with that. I think that was probably a good plan, especially for an investor-focused standard. So yeah, I will see what happens under the current requirements. I will note that that SASB standards can be used to meet the current requirements in the CSR in the CSRD actually until a point where ESRS had developed their own sector guidance. So we'll see how that plays out. I think they're continuing to hear feedback from investors that in industry-specific information is going to be super important.
Thank you, Jeffrey. And also, as a follow-up quick question before we continue, we see that the SASB standards are organized by industries. IFRS logic, as we all know, is by type of transactions, type of activities, type of revenues, type of assets, etc., etc. So what was the logic behind, if you can a little bit clarify this?
Yeah, I think it comes down to ultimately what we're asking an entity to disclose. Financial statements look at they take all of the activities that a company engages in and all the events that affect a company, and then they try to figure out which ones are going to be useful to capture on a balance sheet as assets of the entity, liabilities or obligations of a company, and then trying to capture aspects of their relevant activities in terms of like you have sales, so what's the dollar, what's the currency amount, I should say, of those sales? Like how much were your sales? What are your expenses? How much is your cash flow from different activities? But because all of those things are going into one interrelated debit credit system, all in terms of currency, one of the things that allows an entity to do is take all sorts of different activities and capture one dimension of them, the costs, the revenues, or the assessed value of an asset or a liability. So it allows a diverse set of activities to be measured or reported on one specific dimension. Sustainability issues actually sit like what I think of as like one level deeper, right? So rather than only thinking about what are the revenues or expenses from this period, what are the existing assets or liabilities of a company right now, it's thinking more about what are the risks and opportunities in the future and tell us about them. What are the things happening right now that can help us understand whether those risks and opportunities are being managed well? And so because we're not requiring all of that to be reported on in a currency, some of the measures are certainly in currency units, but many of them would be in the emissions, if that's one of the issues, whether that's air pollutants or greenhouse gas emissions, or it might be measures of like health and safety when it comes to employees, so thinking about accidents, or it might be related to investments in a workforce, and so thinking about what types of programs a company might have in order to develop its workforce. So, because that's the level at which we're pulling out the information, we're asking for measures that are going to be most relevant on those dimensions, and we can do it in a way that's very closely related to the activities. But that, in a sense, means that we can't get too far away from what those activities are, and so we're very focused on industry in that dimension. I actually think, the financial accounting wonky side of me, likes to think about the fact that at the end of the day, even accounting, financial accounting, still has a very strong industry flavor to it. The IFRS Foundation, the IASB developed in a sense, an industry agnostic approach to revenue recognition using a customer-based model. But at the end of the day, there's still a lot of guidance that helps companies in different industries to understand what those words actually mean when it comes to satisfying a performance obligation, for example. So, but it was really trying to focus on what are the most relevant issues and how do we produce it in a way that is, decision useful. So hopefully that helps. But I think of it as being, we're just a level deeper into the closer to what's actually happening inside of the company.
Thank you, Jeffrey. So let's continue the presentation. We don't have any open questions in QA as of now.
Okay, so what I was going to do now is just do a relatively quick SASB Navigator demo, and this is just to help everybody understand how they might access information related to the SASB standards. So for that, I just need to switch screens here. Just give me 1 second. Okay, and can you see this okay? Billy?
Looks okay, Jeff.
Yeah, great. So when you log into the SASB Standards Navigator, this is the home page that it would take you to. And so what you'll see here is that inside of the Navigator, you have a number of different options. So you land right on what's called the industry standard lookup. And so this allows you to either search directly or to browse by the different sector structure, different sectors and the specific industries. Look for a specific industry inside of that. But also at the top, you could. So if you click through here, what you'll see is this will give you access through an HTML format. But there's also the PDF collection where if you wanted to specifically download a given standard, or you see at the top also it's called premium features. So there's a materiality map and a cross-sector search. So one way to think about this is if you're trying to find information at a relatively high level, there's a couple ways that you could browse. So if you're just browsing through trying to get a sense of what's in the SASB standards, on this very first homepage with the industry standard lookup, you can again just browse through the different sectors. And if you landed on one of the financial sectors and wanted to look at, for example, the insurance standard, you click on that and you can see it takes you over to insurance with the industry description that we had talked about that each industry standard would have, as well as the different disclosure topics and activity metrics that would be related to it. So this pulls all of that information into an easily accessible format that you could then read more about. And if you wanted to look, for example, at a specific topic in the insurance industry, for example, on incorporation of the ESG factors into investment management, you could read about that as well as look at the specific metric that is related, metric or metrics that might be related to that. And then if you wanted to dive even deeper, you can dig into the technical protocol. So one of the nice things about this approach, this way to access the standards, is that for any given sector, it shows you the industries. For any industry, it shows you then the topics, and any topic, it shows you the metrics, and then any metrics, it shows you the technical protocol. So you can kind of decide how deep you want to go. That's a little bit different than what you would see in the, if we were to go to the PDF collections, it's just structured a bit differently. But if you were to, again, go to, say, the financial sector, go to insurance, here it's going to give you a downloadable PDF file, and it's got all the same information as what we saw in the other way to access the information through the industry lookup, but it's structured a little bit differently. So, it gives an introduction to the SASB standards, an overview of their approach, and then here you get that industry description. Make that a little bit bigger. Here you get the industry description, and then it goes right into this what we call the topics and metrics table. And so here all the topics and metrics are presented together. And then if you wanted to read it about any specific topic or metric, then you would just have to scroll down, and you kind of, or do a Control F to find a specific topic. And with each topic, it immediately then goes into the technical protocols. So there's a lot of detail here before you then get to the next topic. So this is a really great way, if you know that there's a particular industry that you want to dive deep into, saving the PDF file and having that easily accessible is probably a good way to do that. Although keep in mind that if you save a PDF file, you always want to make sure that that you have the most recent version. So that's the nice thing about accessing that specifically through Navigator. So, okay, so that's PDFs. And then going back, so, again, this is how you might access the SASB standards in a high-level way. But another way to do that would be to look at the materiality map. So I showed you a brief glimpse of that. But if you go to Premium Features and select the materiality map, then what you see are, again, these 5 broad dimensions, but specifically like the 26 different categories. And so, here you can be looking at, and then across the what I think of as the x-axis, so the different columns, these relate to the different 11 sectors. So, in the extractive sector, if you were to click on that, you would see that here you have different kinds of extractive companies. So coal, construction materials, iron and steel, metals and mining, and then there's the oil and gas value chain. So exploration and production, midstream, refining and marketing, and then related oil and gas services. And so that's the extractive sector, and you could look at, for example, in again, like oil and gas and exploration and production. If you clicked on greenhouse gas emissions, that will pop up what the topic is that has been identified related to greenhouse gas emissions, and the accounting metrics related to that. And then you can kind of click through if you want and see related topics for that given industry. So this is a high-level way to see kind of everything and then dive down into it, going at like the financial sector. Again, you could think about looking at the financial sector and the 7 different industries for the financial sector. You might look and say, oh, look, in under business model and innovation, under the specific issue of or the general issue category of product design and life cycle management, you can see that there are, here we have, oh, I can't write on the screen, I forgot. So you have 5 different topics across the 7 industries related to product design and life cycle management. So you could click on each of those if you wanted, but probably if you were interested in understanding more how product design and lifecycle management ends up manifesting in the SASB standards in the financials sector, what you could do is go back to the homepage, And instead of looking at the materiality map, you could look at do a cross-sector search. And so if you do a cross-sector search, then you could, for example, say, well, I'm interested in the financial sector, but specifically, so you could look at like these broad 5 dimensions, but maybe we're more specifically interested in understanding better the product design and lifecycle management general issue category for the financial sector. And then you can click, what you want to focus on, but I'll just leave them all clicked for now. If you go ahead and then search, what you'll see is that it identifies 9 topics across the 5 industries, as we had mentioned. And so you would see in asset management that there's incorporation of ESG factors into investment management and advisory services. For commercial banks, the incorporation of ESG factors into credit analysis. For the insurance industry, it's again thinking about investment management, and then how it factors into investment banking and brokerage activities for investment banking company. And then it's related to, because securities and commodity exchanges are pretty different than say banks or insurance providers. It's about promoting transparent and efficient capital markets. But again, you could, if you were to compare any of these, if you looked at, for example, the topic description, or maybe like, the accounting metrics specifically under asset management, you would see, well, it's asking for the amount of assets under management by asset class that are using ESG integration or sustainability themes, or use some sort of screening approach. And so helping different asset managers to disclose information about how ESG is being factored into their investment management and advisory services. There are also going to be topic descriptions that, again, help you understand what that specific topic is trying to get at. And the value description is trying to draw that linkage between performance on a measure and how that could end up translating into financial outcomes. But that would be, that's an example from asset management. But if you were, again, to compare that, say, to a commercial bank, here you'll see, again, like the focus is more on thinking about how this, environmental issues show up in a company's commercial bank's lending practices, and thinking about what specifically are we asking for there. It's a description of the approach that the bank is using ESG types of issues in its credit analysis. So an example there. So that's one way that you can think about trying to explore some of the different issues that could come up in different sectors, or in a specific sector, or across different industries, if you wanted to do more of like a thematic approach. And then maybe the last thing to sort of point out is, if you are thinking about a specific company and you're not sure what the most relevant standard might be, there's an easier way to think about that. So, let's say you were thinking about a company like AMD. You can type that in and see, okay, well, AMD, and if you're not sure what the ticker is, you can go ahead and you could put in multiple tickers as well, and click and say, okay, what shows up here? So for these different industries, for advanced micro devices, that's a tech and comm sector, specifically it's a semiconductor industry. And so it's going to go ahead and pull up the standards related to semiconductors, versus this other company, which turns out is a containers and packaging company. A very, very different standard, very different issues. So if you weren't sure there, that would be a way that you could kind of quickly see what is the most relevant standard for a given company. Now, the limitation here is that this is only really going to link to a single industry, and actually many companies might actually have more than one industry standard that they might apply. In the financial sector, we certainly see that with large integrated banks. They often have, especially in different parts of the world, they may have multiple standards. They may be involved in commercial lending as well as consumer finance, maybe even investment banking activities, depending on the regulations that are applicable in their jurisdiction. So hopefully that's helpful. This is just a way to show you how you can dive in on different issues, different industries, and do some research this way. Andre, any questions on this?
Jeffrey, it's just to mention that colleagues pay attention to the general chat as well, because Aurora mentioned that to be able to navigate through this information, you need to create an account, and then you'll be able to do that. So that's important to know. Jeffrey, over to you.
Okay, yeah, great. So let's, from here, actually, we can jump back to the presentation. And let me... Okay, Andre, can you see my slides again? It's okay. Thank you.
Yes, yes.
Okay, great. Okay, so maybe just to spend a few minutes to kind of talk about how the SASB standards relate to applying the IFRS standards. And this comes a little bit back to the question that Andre had asked about. So when a jurisdiction has adopted the ISSB standards and has not amended them or carved anything out, then one of the requirements, again, will be that a company applying the standards will be required to refer to and consider the SASB standards, and essentially to make a judgment about whether, which, if any, of the SASB standards are relevant to their operations, and which specific topics and metrics would be relevant related to those to those industries that a company should then provide information about. So this is taken from educational material that the ISSB has developed on how to apply, how to use the SASB standards when applying IFRS S1. And so this is taking the requirements. This educational material takes the requirements of S1 and translates that into SASB specific requirements. So the first requirements for an entity in S1 would be that it has to identify the sustainability related risks and opportunities that could reasonably be affected to affect its prospects, disclose information about that. That then translates into essentially that two-step process, figure out what are the issues, and then how to disclose information that would be material. That is then broken into essentially like 4 steps inside of the SASB standards, looking at, well, what are the relevant industries, what are the relevant topics, what are the relevant metrics, and then applying the technical protocol to produce the information. So just maybe to quickly walk through an example here. So this would then be going back to what we had just seen in the Navigator, for example, where a company could go in and do a search to figure out, for its ticker, what's the most relevant, likely relevant guidance that would be, or the relevant industry standard, I should say. So they can search that. If they knew it directly, of course, as we saw, they could click immediately to that. But just to take something so you can see some of the different types of issues that manifest in different industries. Let's go ahead and we're using the apparel industry here, apparel, accessories, and footwear. So if an apparels company pulled this standard up and then looked first at the industry description, it should be understanding what was intended when we designed the standard. And again, this is one of the tricky things in developing standards is that one standard that tries to fit all companies' operations would be so high level that it would require companies to use almost entirely their own judgments to decide what's relevant, or it would be completely onerous because it would ask every company to disclose everything. On the flip side, you know, any granularity that is applied, any you know, parsing of the economic world into you know, a smaller set of companies that you're developing guidance for, will never be perfectly designed to fit one company. So that's sort of a tricky aspect to decide. You know, one's definitely too few, but 10,000 would be way too many. We've settled on 77, which I will say is a finer partition than what we've seen. For example, with GRI, I think has proposed something closer to 40 standards that they're considering developing for different types of sectors. But again, so a company would look to find what seemed to be the most relevant industry, read the industry description. This would be noting that, so a clothing company would see that, well, the standard was designed for both apparel, like clothing, as well as accessories, necklaces, other things, footwear, you know, and all of that being kind of what's intended to be captured in this guidance. And so a company might recognize that this is, you know, only part of their operations, that maybe they also, you know, have a more integrated value chain. So they might be vertically integrated and have additional exposures, either because of the, you know, they're further up or further down the value chain than what this industry standard is meant to tackle. So there might be more than one SASB standard that they feel they might need to apply. So that's okay as well. But they also might feel like, well, we're only a footwear company, and so maybe some aspects of this guidance might be a bit broader and not entirely relevant to their operations. So there's always going to be some judgment here, but we're trying to reduce the scope of discretion that has to be applied by providing a more prescriptive, more detailed set of guidance that's intended to be a closer fit to both the way that companies operate and also the way that investors use information. So the next thing would be, you know, looking if they've identified the apparel's standard as being potentially relevant given the industry description. They would then look at, well, what are the disclosure topics that have been identified for this given industry? And so, you know, this is just highlighting here in the yellow. They would be looking through those disclosure topics: management of chemicals in products, environmental impacts in the supply chain, labor conditions in the supply chain, raw material sourcing. So these would be some of those topics. And then if we were to dive in a little closer here, looking at like management of chemicals and products, that's a topic name. But as we mentioned, there's a specific topic summary for each of the topics. And so again, we want companies to understand whether, you know, what we meant by a particular topic label, so that they can be sure that that seems like it resonates as something that's relevant to their operations. Now, it's important to recognize again that a company could determine that one or more of those disclosure topics isn't relevant to their industries, maybe because of where they operate, or perhaps because they have a narrower focus than what the standard was designed to cover. In which case, if that's okay, no problem. They might need to consider other sources of guidance if they feel like there are issues that they face that weren't captured inside of a given SASB standard. And then once they've identified what a risk or opportunity would be for them related to those given topics, then identifying the relevant metrics. So if they've identified management of chemicals and products as being a relevant risk or opportunity for them captured in that disclosure topic, then they can look at the associated metrics for that topic, and again read about what is captured in how to produce those metrics, looking at the both the description of the metric as well as the technical protocol that describes how to produce that metric. And again, they might determine that one or more of the associated metrics is not relevant, perhaps because of, again, the way that they operate or where they operate. So in such cases, it would be important that they should look to other sources of guidance for that topic, because again, if they've already determined that management of chemicals and products is relevant, then they need to disclose information about that. If the metrics in the SASB standards aren't suitable for some reason, then they should be looking for other industry guidance or industry practice or something to help them produce the most useful information that they can related to that topic. And then lastly, once they've settled on which topics and which metrics, if they have identified those ones from the SASB standards, they can look then at the technical protocols that would help them to actually produce the information. So on the topic of management of chemicals and products, they would be looking at, for example, the first metric asking for a discussion of the processes to maintain compliance with restricted substances and regulations. There's a whole set of topics that the company should be considering disclosing information about. And that's the technical protocols. So that is how a company would go through applying, using the SASB standards to meet the requirements of the S1 in particular, but also there's a similar process that would be required for climate-specific topics as well. But maybe they can, at a very high level, in applying S1, you're required to consider it, but because the SASB standards have not gone through all of the process yet of being endorsed by, reviewed through the IFRS Foundation's due process and endorsed by the ISSB, we don't require companies to apply the SASB standards, but we do require them to look to and consider that information. Ultimately, what it means is they need to be able to make a judgment about which, if any, of the SASB standards topics are relevant to their operations and which ones aren't. Any specific questions on this process?
Okay, thank you, Jeffrey. Just a quick question. Well, there is one question in the box about the role of various people in producing financial information. So the question is that usually financial statements are prepared by company accountants, and others will measure, for instance, air pollution and other indicators that are required for SASB standards. I could argue that even financial information is not prepared entirely by accountants, because the entire business is involved. You need to know what happens and you get from production and from other sources of information. So the question is maybe more to say that companies will need specialized expertise in their various departments to be able to collect the relevant information. So Jeff, if you can comment on this one.
Yeah, it is a good question, and Andre, I completely agree with your perspective that even financial accounting information is not entirely captured just by accountants. And as a personal anecdote, so my spouse is a civil engineer. She works on road work. So for a large consultancy, engineering consultancy, and the Department of Transportation is the client, and I know that, although she has an MBA, she is not an accountant, but I hear her on the phone all the time with the accountant and tracking, she has the Excel spreadsheets open, they're tracking the product costs and, the projections. So absolutely, I think what's really important about all of this is that financial accounting and sustainability reporting is all about capturing things that are happening inside the company, at the level at which they happen, right? So, it's the events and activities, the transactions, exchanges, the decisions that are being made inside of a company that we're trying to capture information about. And that information gets pulled into a system and ultimately has to aggregate up in a way that both can make the information useful inside of the company to make decisions, and then also, be used externally to meet reporting requirements, whether that's related to mandatory disclosure requirements or voluntary disclosures that companies are making. I think all good accounting should really be a cross-functional type of process. But I think the question that was raised still, I think, captures an important reality, which is that the financial accounting, the controller, the CFO, chief accounting officer, the finance function inside of most companies has long had sort of jurisdiction over how costs, revenues, assets and liabilities, how that information gets captured, what information is tracked inside the information system, and what gets ultimately disclosed for various purposes. And historically, in most companies, it is true that the responsibility for gathering sustainability-related information and even disclosing that information has often been a different part of a business, and those two sides haven't necessarily talked a lot. What I've seen is that, especially in the last, say, 5 to 7 years, where there's been a lot more focus on investor reporting, what I've seen is that once the finance function inside of a company realized that information is being produced on sustainability issues to be consumed by investors, then they started to ask a lot more questions about, well, where is this information coming from? Why would we want to disclose this information? How sure are we that we're confident in the numbers that are being produced? And is this going to create any challenges for us? Are we comfortable with it? And so what I've seen is that the finance function has definitely started to oversee sustainability reporting, especially for investor-oriented disclosures, anything that might show up in an annual report, anything that might be discussed in meetings with investors. So I think there's sort of a recognition that the finance function is more and more having to understand some aspects of sustainability disclosure. But I do think, one of the ways I think about this is, if the SASB standards or any standard setter has done a good job of identifying the relevant issues for a given industry, then that information that we're asking for shouldn't seem completely foreign, in a sense, to the finance function. So, if you're thinking about being an auto manufacturer, while it's true that a CFO might not be super well informed about what greenhouse gases are and how they get calculated, they certainly understand the issue of what kinds of vehicles are they producing, and when they're making decisions about where to allocate capital inside of the company, in which regions are they investing in R&D to develop different kinds of vehicles to meet different regulations or different customer demands. So if we've done a good job of capturing the issues, and I think a little later I might be able to come back to that specific example to show this, how this, you can actually see the connection from the high-level organization inside of a company all the way down to the non-accountants inside of a company as well. So it's a good question, and I think it's something that we've seen. My experience is we've seen definitely a transition over time, and that sustainability professionals have seen their role in a company actually elevate over time, moving from a head of safety to more of a chief sustainability officer who's meeting with other executives to try to integrate the most important issues into the company's strategy.
Thank you, Jeffrey. I just want to look at the timing. We are
Yes.
35 minutes left. So
Okay.
let's park for now the questions, and let's try to complete the presentations. Because I remember you had many more slides, but let's maybe run them a little bit quicker, and
Yep.
then we can a couple of burning questions from the audience to make sure that we answer them.
For sure. Yeah, I think that's no problem. Okay, so I wanted to spend a little bit of time just thinking about how different kinds of themes that the listeners may have heard of could appear in the SASB standards. And so I wanted to focus on two topics: human capital and nature. These are very high-level sustainability themes, but what do they mean when you think about different industries? So the reason that I wanted to pick these two in particular is that they're very important to many companies, and they're actually a focus of the current ISSB's work stream. So we have two research projects to think about whether we can develop and should develop additional guidance related to human capital disclosures, and whether we should develop additional guidance related to nature issues, specifically biodiversity, ecosystems, and ecosystem services. So these two broad research projects have a number of work streams that sit underneath it, where we're, again, this will seem familiar to the way I described the work of SASB early on. We're looking for evidence of investor interest. We're looking for evidence of where we see financial implications. Like what are the specific human capital issues that seem to be manifesting? How does that translate into, challenges with, workforce efficiency or, additional expenses that might be related to trying to hire. And then thinking about, existing standards and frameworks, where do we see current guidance already out there? And what do we see companies already disclosing? So all of this is meant to inform whether there's going to be an opportunity to develop useful guidance that's needed by the market related to human capital or, broadly speaking, nature-related issues. So what I wanted to do, though, is this is some of the work that our research team has done. So when thinking about what standards cover different kinds of issues, we, of course, also looked through the SASB standards because we have responsibility for the SASB standards. And I think there's some something that you can kind of understand about human capital and different industries, and then also how that is related to how that sort of compares to nature-related issues. So if you were to look through the current SASB standards, what we see is that there's human capital is, in a sense, widely covered in the SASB standards in that 71%, so nearly 3/4 of all of the 77 industries, have at least one human capital related metric. And those currently relate to sort of 4 general issue categories that we have identified. So workforce health and safety, labor practices, employee engagement, diversity and inclusion, and then also labor conditions in the supply chain. So a little bit less the direct workforce, but workforce in your supply chain. So those are the ones that we have historically identified. I don't think they are nearly sufficient to capture all of the human capital issues that are relevant. And so I suspect that we're going to be doing work here going forward. But one of the things that's interesting is that, I think that if you think of all of the metrics that are covered across all 77 industries, these 4 topics, metrics related to these 4 topics, capture about 17% of all of the SASB metrics. So so about 1 in 5, a little less than 1 in 5. If you just pick at random a SASB metric, 1 in 5 is going to be related to human capital. But it's interesting to me that, like, if you then look at nature. Oh, actually, so before we get there, this is just an example of like those different issues. There's difference in there's variance in the prevalence of these topics. So workforce health and safety is the most prominent in the SASB standards, shows up in about 1 in 4 of those industries, whereas like employee engagement, diversity and inclusion has historically only been in about 1 in 10. And in particular, historically we had identified that as being most relevant in firms where there's high competition for scarce talent, or a need to reach diverse customers. So in both of those cases, you want to make sure that you've got the right employees to meet your customers' needs, or that you've got, that you're not artificially cutting off part of the talent pool. So that's where we have historically identified employee engagement, diversity, and inclusion as a topic. Whether that's the right number of industries or not, and whether this is the right way to group those topics and issues together, that's something that we could continue to revisit. But just to kind of show you that that's some of the characteristics of different industries, whereas like workforce, health, and safety is in those industries where what a company is asking of employees is putting them into either a place where there could be accidents or where they might face chronic workforce conditions. Now, you can compare that to the nature-related issues where actually almost 85% of the industries have at least one nature-related metric. But what's interesting to me is that you can see all the different kinds of topics that are captured in the SASB standards that relate to nature: air quality, water and waste water management, ecological impacts, the way that products are designed, material sourcing. And this is actually excluding, you'll see in the note down here, this is actually excluding energy management and greenhouse gas emissions, which are two big direct and indirect ways in which climate change can affect nature as well. So actually, it's nature-related issues are widely covered in the SASB standards. However, what you'll see is that the complexity of that is really a lot higher than for human capital. And so when you think about how many metrics it takes to cover these different types of nature-related environmental issues, it's at least, I would say, it's at least 40%. So getting close to like almost half of our metrics are required because nature-related issues, I think at the end of the day, are just much more complicated, and so it takes more topics and metrics in order to capture relevant aspects of how nature is manifesting in different ways, either creating dependencies or impacts or both that a company needs to manage. And again, just seeing some of the prevalence here. So product design and lifecycle management's the most common issue that comes up in the different industries. So in 37, so getting close to about half. And that's looking at products that, industries where products actually have significant life cycle impacts because of the type of energy, how much energy that gets used, or what happens with them after they're being discarded, or if there are land impacts related to the developments because of the resources required in early stage. And you can compare that with ecological impacts, which are really trying to capture industries where there are direct physical impacts on the biosphere. And so we've identified ecological impacts in 15 different industries. For example, in the hard minerals and mining, where you have a very large land footprint that's required in order to access those resources, that tends to have a very significant physical impact. And so that's obviously one place where ecological impacts has been identified. So, maybe we'll not pause here for questions, but just kind of keep moving. But that's just a way to kind of show two things. One is the different ways in which a topic can manifest in different industries. And sometimes it's it's a relatively simpler topic. In other cases, it's a bit more complicated, and so might require more metrics that might occur actually in fewer industries, but trying to get those issues just right. And then also just to highlight that this is ongoing work that we're considering at the ISSB by looking at what's in the SASB standards as part of our our research project, and then I'll talk a little bit in a bit about what our work plan is to continue to improve the SASB standards. But before I get there, I just wanted to comment a little bit just very quickly on, so where are the SASB standards being used? So this is largely, since ISSB standards are relatively new and we're only now beginning to see first applications of the ISSB standards, most of the use of the SASB standards to date has been on a voluntary basis. And so just looking at quickly at a timeline, as I mentioned early on, the first standards setting development work began in sort of like late 2012. The provisional work was largely finished in 2016. We went through a process of revising over the next 2 years. And then in 2018, November of 2018 is when the SASB Standards Board approved the 77 industry standards. And so, the first then reports of those standards, really thinking about like in 2019, they're getting applied. So the first report's kind of coming out in 2020. So really only in the last 5 years would I say that there's been a lot of opportunity to see companies using the standards as approved by the SASB Standards Board. They could look at the provisional standards, of course, before that. But you can see that really it is in that last kind of like 5-year window, we've seen a pretty big uptake. So not a lot of takers in the early years where we were in the provisional stage of developing the SASB standards, but then close to 4,000 companies around the world using the SASB standards. Right now, when we look at like which companies have used the SASB standards in the last couple of years, it's almost 4,000. And if you think about where that is, it's about, mostly it's larger companies, but we also get mid-size and small cap companies using the SASB standards because they're much more accessible than some sustainability guidance. But when you think about the S&P Global 1200, it's about 3/4 of the S&P 1200 that are using the SASB standards, and probably not too surprisingly in English-speaking countries, and so like in the U.S. and in Canada, it's a very high level, over 90%, but also in Latin America. So basically in North and Central South America, the Caribbean, we're seeing over 90% of the largest companies in the indices using the SASB standards. We've seen probably the least amount of application in East Asia. And so this is looking at like the Tokyo Exchange, for example. But what I would also say is that while that historically has been where the standards have been least used, that's also where we're seeing the highest levels of increase year over year, part because it's starting from a smaller base. So getting quite a bit of use in the SASB standards across Europe, especially among larger companies. But again, not quite at the level that we're seeing in North and Central South America and the Caribbean. One thing to point out for why we've seen that is that, it's important to recognize that in 2020, BlackRock announced that they were asking for all the companies in which they were invested to produce SASB-specific disclosures by year end, and then also to report in line with TCFD recommendations. And so that was the first real watershed moment, and around the same time, regulators like the Financial Reporting Council in the UK, as well as all 8 of the Canadian pension plans, all asked for SASB and TCFD. There was just around 2020 a lot of consensus on the value of SASB and TCFD, the industry specificity of SASB and the climate focus of TCFD. And so that's a big part of, I think, what led to that uptake. And so since then, the ISSB has responsibility for the SASB standards and has taken over responsibility for the TCFD guidance as well. And we know that the TCFD Secretariat has sunset and handed that over to the ISSB. So one of the things that we've been doing since the ISSB has been around, since S1 and S2 together kind of bring the ISSB standards and TCFD guidance together into one source, and actually elevates it in a way that I think makes it really very high quality and addresses the entity-specific issues as well. I think it's been really important that we've been able to go back out to the investor community and essentially do an educational process to help them understand what they would get if they were to then shift their requests to companies from saying they had been saying SASB and TCFD. Well, helping them understand, like, now you should be saying ISSB, and why should you be saying ISSB? What are the benefits of that? So that's been a process that we've gone through in trying to work with really the whole financial sector. But you can see now that like in the 2024 proxy voting guidelines that BlackRock produced, they have said, rather than saying SASB and TCFD, they're talking about the importance of industry-specific metrics, governance, strategy, risk management, metrics and targets. That is, TCFD and SASB together, no longer saying it specifically that way, but saying, we see the ISSB standards S1 and S2 providing companies with useful guidance and being sure that they also are using industry and company-specific information. Vanguard similarly is now saying that they think, again, like conceptually, industry-specific is very important, such as what's promulgated by the ISSB. Capital Group is specifically calling for ISSB and, to the extent applicable, the underlying SASB and TCFD frameworks. And Neuberger Berman, again, talking about how they've been supportive of the work of the TCFD and the ISSB, including SASB, and so expecting companies to produce reporting that's in alignment with the TCFD recommendations and consider implementation of S1 and S2 as kind of like the next step, recognizing that this has been part of an evolutionary process in guidance. So definitely a lot of change management that we've been trying to manage when it comes to what the investor sector is asking the companies that they're invested in to disclose information about. But I wanted to, if it was helpful, to provide a couple examples of how different companies have historically used sustainability-related information. And so this is an example from Neuberger Berman, and how this is taken from their environmental, social, and governance policy guide. And they talk about their proprietary ESG quotient rating. And so, and it's an example from the retail and general merchandise industry. But you can see that what they've got here is 4 different companies, and then they've got different buckets of information, environmental and social, as well as governance. And so these companies get rated on different dimensions, but the importance of different dimensions is going to vary from one industry to another. And so here's where they've pulled the environmental and social issues that are relevant to a retail and merchandising company, and what are the governance issues at a high level that would be important as well. So those are less specific to different industries, but the environmental and social issues vary a lot. And so this is going to end up looking a bit like the materiality map, where they're trying to map what is relevant. And so let me just kind of move on to the next page. And what they ultimately do is they rank them on 4 different, best, top quartile, worst quartile, rank 1 to 4, get an average ESG rating. But what's really important here, and I won't go into all of this, is essentially, they're running this through a financial materiality perspective, through the lens of, thinking about which specific issues are going to matter, and again, focus very much on like the material ESG factors, which are going to vary by industry. So that's an example for Neuberger Berman. This is an example that State Street put out a number of years ago, where they talked about how they're using SASB again to understand what the relevant issues are, and how they would sort of then match that with different data sources. So one of the things they talked about here is that because a lot of companies historically haven't been specifically disclosing information about their performance on relevant sustainability issues, they've had to rely on buying data sources from companies, the raters and rankers that rate companies along lots of different dimensions. And so what they've talked about in this example is that at that time they were typically buying from about 4 different data providers and then mapping that data to essentially the materiality map of SASB. So as one specific example, they might buy for a whole slew of companies, they might be buying data from one provider where that data provider gives them 180 data points on every company. But when they take that data provider's data points and they map those data points to the general issue categories in the SASB framework, they might find that only half of those metrics are material in any industry. And then so this is looking at of those 180 data points, which are the 91 that are relevant in different areas. And ultimately, they're seeing sort of like 91 total, but spread out across those 5 broad buckets. But another 89 that are not relevant really in any industry as SASB has identified. So then, even if they've identified issues as being relevant in some industry, they would still say, well, if these data points apply to an asset management company versus a household and personal products company, then they wouldn't necessarily care even about those 91 data points, but actually about 22 specific data points for the asset management company, or 26 different data points for the household and personal products company. So really what they're showing here is how they're using the SASB structure to get a much more targeted look at like what are the relevant issues. Now, a little bit of the secret sauce is going to be, of course, how do they weight these different issues beyond that? They don't actually explain that in this work, but they use that to come up with something called their R factor, which would then be used across their investment teams as for both fixed income, active investment, and this active management and index funds as well. So again, just a very quick example there. And I know we're down to the last 10 minutes, so maybe I'll keep going, Andre. Is that? Yeah. Okay, so let me give a couple examples of what I think are some of the important conceptual bases for the SASB standards. And this relates to the ISSB's continuing approach to doing standards development. So when you think about the goal here, it's to produce decision useful information. And so there are 2 key fundamental characteristics. This has always been the case, not always been the case, but for a long time, financial accounting has said, decision useful information for investor decision making means you need to think about what's relevant, and then how can you faithfully represent the relevant information. And then also there are enhancing characteristics. Information is more likely to be useful if that relevant, faithfully represented information can produce comparable information, if it can be verified by somebody else, if it's timely, so not coming after a decision is made, but in time for a decision, and if it can ultimately be understood by those who would use the information. So this is what the IASB thinks about when developing standards, and it's also what the ISSB thinks about. But it was also part of what informed the decision-making for the SASB Standards Board. So I wanted to provide just a couple examples of this quickly, thinking about how do we think about relevant information. So going back to a car example, in the transportation sector, for the automobile industry, one of the topics that's been identified is fuel economy and the use phase emissions, so emissions associated with when a product is being used. So how do we think about the relevance? How do we assess the relevance of fuel efficiency and use phase emissions? One would be thinking about what's that financial impact. So, seeing regulatory standards shift, customer demand shift will helping linking to like market share, revenue in a given year. Thinking about what are investors asking for. Investors want to know what kinds of vehicles companies are selling right now, what kinds of vehicles they're going to be selling. Thinking about what's a prevalent issue. So, we want to pick issues that are going to show up anytime we're talking about selling automobiles. It doesn't have to be related to selling clothes, but if it's about selling automobiles, then if it's whether it's in South America or in Africa, what are some of those issues going to be? And so can this be something that is broadly discussed and talked about around the world? And then ultimately, is this information that can be linked to strategy and operational decision making? So just to kind of show you an example of this, and how it translates into actual disclosures. So for this particular topic, there are 3 metrics that SASB has identified. What are the sales weighted? What's the fleet fuel efficiency of the vehicles that are being sold and by different regions in different regions? How many different vehicles are being sold in different regions? And then what's the strategy for managing that? So this is taken from Daimler's SASB report a few years back. And so looking at, so the sales weighted average fleet fuel economy by region, they're talking about, the different kinds, the different fuel economy that shows up in different regions around the world. So breaking it out in the US, in Europe, and in China in particular. And then when you look at, well, what types of vehicles are they selling and where? They break it out here by hybrid, electric, and alternative, worldwide versus in Europe. And they provide comparative information 1 year to the next. So a really nice disclosure here for that second topic. And then when you look at the third topic, the third metric, which is the discussion for how they manage fleet fuel economy and emissions risks and opportunities, here is their disclosure where they're explaining that. And just to dive in a little bit, one of the things I think is nice is they talk about how, ultimately it's management's responsibility for setting strategic goals related to managing their emissions of their vehicles that they sell. But they then talk about, they've got a product steering board that thinks about how that relates to the different kinds of vehicles that they're being sold. They've got then a worldwide harmonized light vehicles test procedure that gets applied. And ultimately, this moves down through the company to going from like the board of management members down to, for example, the different product groups, and in particular, like the drive systems product group, and getting all the way down to like global powertrain and manufacturing, engineering and trucks units, and then all the way to like ultimately like thinking about the head of sales for Daimler showroom. So really trying to explain how their strategy gets set, and then how it makes its way through product development all the way to then the sales of the vehicles that are being developed. So I think a nice disclosure there. And then thinking about faithful representation, information is only going to be faithfully represented if it's capturing all of the relevant information that would be needed. And so this came to light, one of the things that came to light in the development of the SASB standards in the real estate sector was that energy management was a really important issue. But one of the things that we understood is that actually, real estate companies in particular can have a challenge getting data because they're not always the ones getting the energy bills. It might be their customers, the tenants that are actually being billed. And so not all real estate management companies actually have 100% coverage. And that turns out like that's really going to be important for understanding how complete that information is. And so here are 2 examples. One is Vornado, a realty trust that is disclosing information here. They have operations in essentially 3 U.S. markets, That's a big part. So in New York, Chicago, that's the MART, and 555 California. Those are their 3 regional areas. And here they're showing that basically they've got 100% coverage of their energy consumption data. So when they disclose any other information about energy, you know that that's from all of their properties. But you can contrast that with American Homes in their 2020 report. One of the things that they reported is that they're only able to get the energy for about 90% of their portfolio of properties. And so there's 10% that they own, but they don't have the data on that. And so that's just kind of, showing that, investors would need to know that information that's being disclosed is part of the data, but it's not all of the data. And so that's part of what helps to produce that information. So let me actually kind of skip this last part because I want to jump just very quickly to the future of the SASB standards under ISSB. So we currently have a 2-year work plan that we're working on that includes 2 research projects, as I had mentioned, on nature and human capital, but it also includes a big project on working to enhance the SASB standards. And so the reason that the board decided to focus on the SASB standards is, 1, they're an important part of how a company would have high quality implementation of S1 and S2. But 2, work in improving the SASB standards is ultimately going to relate to improvements in our human capital coverage and nature related issues as well. So would very much support the work of the research projects, and ultimately because industry information is really important. So since as I had mentioned, the SASB standards were approved back in 2018, the SASB standards board continued to work to revise the SASB standards in a targeted way before handing off the standards to the ISSB in mid-2022. And since that time, the ISSB has done some internationalization of the SASB standards, so really trying to work to remove jurisdiction-specific references that might be hard for some companies to apply in different jurisdictions. And is then, after finishing that internationalization work, is then going through a 2-phased project to work to do a comprehensive review of the SASB standards. So the objective is to really support, again, high quality implementation and application of S1 and S2 through making improvements to the SASB standards so that they can be used by companies around the world. So where we are right now is that there's an exposure draft that has been issued just a few days ago and will be open for 180 days. So up to it's 180 days, not quite 180 days. So 100. Well, it's up until November.
150 days, Jeff.
Sorry.
150 days.
Sorry, 150. Yeah, it was. We had debated between the normal 120 and 180 at the other end, and settled on something in between there. And so up until November 30th, I believe the exposure draft will be available, but it's covering 12 industries that we thought were really important to address because we had heard that there were real opportunities to improve those standards. They also cover a number of issues that are relevant across many of our industry standards, and so are a good opportunity. So we've targeted 12 industries. 9 of them are out at the moment, and in addition to a comprehensive look at those 12 industries that we'll be doing in the second half of 2025, we're also then doing targeted amendments. So because greenhouse gas emissions, energy management, water, labor practices, health and safety show up in many industries besides just the ones that we're focused on in this first exposure draft, we're targeting an additional 41 industries, not for comprehensive review, but to make sure that any changes we make to greenhouse gases, energy, or these other 5 topics would be consistent as appropriate in other industries where those same topics occur. So that's the first phase of work that we're going to be working on in the first half of the year, but in the second half, in phase two, so really in 2026 and beyond, we'll be thinking about whether we need to make any adjustments to the way that we've identified the 77 industries. Do we need more? Should we collapse some? Do we need to reorganize them at all? And what other industries and topics should we prioritize in that work? So we'll probably have some preliminary decisions about our phase two focus in the second half of this year, with that work really kicking in 2026. But we're hoping to in the next 18 months to wrap up a very comprehensive review of the SASB standards to make sure they're as up to date as possible. So a couple minutes over. Apologies for that, but I'll go ahead and stop.
Thank you, Jeffrey. This was very comprehensive, and colleagues, unfortunately, we ran out of time and we couldn't go in details through all the slides, but the slides will be available. A quick question in the open box is that will we see S3 anytime soon? Is that what is going to happen, or?
That's probably one of the most common questions that we get. I think what we can say is that the work that we're doing on nature and human capital, the bees and human capitals research projects, in the next 6 months, I would say that we're going to be making decisions about whether or not we think we should do standard setting in those areas and what it might look like. So although we won't see an S3, for example, in the next 6 months, I think in the next 6 months, we will see whether or not the board has a sense of what will be coming in the near term.
Thank you so much, Jeffrey. Colleagues, I think this is end of the presentation, and I'll pass over to Svetlana for closing. Thank you.
Thank you, Andrei, and indeed, thank you very much, Jeff, for such a comprehensive presentation. We definitely will continue our cooperation. As you mentioned before, standards can be applied also by companies in jurisdictions where European sustainability reporting standards are mandated. So indeed, it's an interesting topic, and we'll continue our collaboration in the benefit of our clients in Europe and Central Asia region. Also, to inform participants, we'll organize a separate series of webinars to address European sustainability reporting standards and European requirements, but only after a final decision will be taken regarding simplification, ongoing simplification agenda in the EU now. So a big round of virtual applauses goes to you, Jeff. Again, thank you very much for your great contribution. Thank you, dear participants, for joining us, for asking questions. This is very important to see you are interested in the topic. Also, special thanks to Aurora, of course, Director of Strategic Affairs at the IFRS Foundation, for her great contribution and support in organizing this area of webinars. Next webinar will take place next Wednesday. Please join us, and we will discuss aspects related to regulatory adoption. I also would like to wish our participants in Skopje productive sessions tomorrow and after tomorrow on their training on insurance contracts. Just to inform participants, the training in Skopje is specifically tailored to the needs of insurance regulator and is by invitation only. And finally, this webinar and as well the training in Skopje is organized under our regional program Enhancing Accounting, Auditing and Sustainability Reporting, co-funded by the Austrian Federal Ministry of Finance, the Swiss State Secretariat for Economic Affairs, and the Austrian Development Agency. Again, many thanks to our donors for their great support on this reform agenda. Thank you to the entire CFRR team for their great support, of course, to our interpreters, and see you all next Wednesday.